Hmm. Hello, guys. Welcome to today's live stream. So, today's Monday, and as you know, Monday is a very sideways day generally, and that's what exactly we see today as well. Market is just moving sideways. There is no clear trend in the 1 hour time frame. Also, if you look at the lower time frames, there also market is just playing sideways movement. No clear structure at all. Thing that I want to tell you is that 1 hour has given a very nice drop after taking out 5172 last Friday, and it should have directly continued higher. But I told you the reason why market dropped because the current rates can now be extended further. Why? Because the oil price is going higher, and if the oil price goes high, that means the inflation can remain high. And if the inflation remains high, that means the interest rates cannot be cut. Rather, interest rates can be hiked in the upcoming days. But hiking is a different factor altogether. But if we look at the labor market last week, then as you know that it was very bad. The data missed in a big way. The NFP data came, I think, minus 98k, something like that, which is definitely a very concerning factor for the feds to watch. And I'm pretty sure that the feds are now thinking what should they target first. Should they go for fixing the labor market right now, or should they go for fixing inflation? Because it's a very dire, you can say, situation for the feds altogether, because the inflation rate is saying that we need higher interest rates so that the inflation can come down to 2%. But the labor market is messed up in a way that if the inflation rates are hiked, then this is going to further, you can say, disbalance the proportion of the labor market. So this is a very, you can say, confusing situation, due to which neither dollar is going in one direction, dollar is sideways. Today it gave a gap up opening because the oil price opened gap up, and that's why gold is also confused where it should go next, because fundamentally that's the main thing that we're looking at right now after the war. Because the war thing has, you can say, yes, it's still there, but the tension has definitely come down a lot. There are, you can say, talks that are which is going on between the Middle East countries and US, and things can definitely they can, I mean, cool off as of now. And that's why gold is just settled, you can say, around $5,000. But right now the situation of the fundamentals, specifically the interest rates, is very important matter, and that is going to decide where gold is going to go next. But structurally, if we just talk about the current structure, then this is still bullish in the higher time frame. If I take you to the weekly, it's clearly bullish. Market has tapped into the weekly order block, and it is pushing higher, creating this obvious higher lows, which is a good sign that the higher time frame is bullish. The bulls are still controlling the market. The momentum is still in the upside direction. But once again, the geopolitical uncertainty right now is it's confusing for everybody, for all kinds of traders, whether it's retail or institution, because we do not really understand what will be the step for the monetary policies in the upcoming FOMCs. So it's going to be very important to see what how that pans out, and how the Feds actually look at the upcoming monetary policies, whether we get interest rates cut, or we get the same rates, or we even get the rates hiked. Because the inflation is going to be over the roof. We have got CPI data this week, and this is going to be very, very high because of the oil prices. So now we have to see what actually happens, and that is going to decide what will happen in dollar index, and that is going to decide where gold is going to next. One thing I want to tell you is that during times of war, just like gold acts as safe haven, similarly dollar also acts as a safe haven. And apart from dollar, Japanese yen, JPY, also acts as a safe haven. So just keep that in mind. That's something to keep note of. And that's why right now dollar is also confused where it should go next. Based on the fundamentals for the last week, it should have already crashed because the NFP missed in a massive way. But that did not happen because this week, as you know, we have got the oil price soaring higher, and it has touched the highs of 2022 once again. So, as you know, Middle East, the multiple things are going on. Iran has actually attacked the biggest oil, I think, corporation, which is, I think, Aramco, or something like that. And yeah, so that was the massive blow off for the oil prices, and that's why the oil prices soared in a massive way. And that's one thing, and that's definitely going to cause massive amount of inflation, not just in the US but also globally, because oil is a very basic necessity, a very basic commodity that every country uses. And even in India, if I talk about India, 85% of the oil it is imported from outside. Only 15% is actually from India's own reservoir, or you can say own supply. So you can see that there is a massive difference between the export and the import. In India itself, 85%, that's a huge number, because you know the population of India itself. So this is indicating that the inflation is actually soaring high, not just in US but also all the countries where they have to buy oil. There is no other factor, no other alternative, like e-vehicles or something like that. In that case, you must get oil. And if you have to buy oil, in that case, obviously you have to pay higher prices. That means your inflation of your country is also going to go higher. Now, these things are important to understand. These are basic fundamentals. You have to understand these things. If you do not understand them, just looking at the charts, technicals, you won't really get the hang of why the chart is moving the way it is. That's why I'm explaining this. Otherwise, I'm not much of a fundamental trader myself. I just like to look at the technicals, the structure of the chart, do multi-time frame analysis, and so on. But these things are very important to understand, because this exactly tells you why gold is moving the way it is, why dollar is moving the way it is, and obviously why oil is moving the way it is. Anyhow, so structurally, now let's talk about the structure itself. The weekly is looking good. We have got a weekly POI which is holding massive displacement to the upside, and now according to the structure, gold should go for the last all-time high at $5,600. No question about that. And it is actually going slowly towards the direction. We have already got a massive amount of push. Okay, so this is already a $100 move, as you can see, from $4,400 to $5,400. So $100 of, not 100, sorry, $1,000 of move. So $1,000 of move have already been, it has already happened, and slowly after some correction of this entire move, it is once again going to push higher. So the momentum is on the upside in the higher time frame, and we're still looking for higher prices. No question about that. Gold is definitely still bullish according to the structure, obviously. Now let's go to the daily time frame. In the daily also, as you know, market is bullish. Recently, market took out the slow, which was inducing sellers, or you can say trapping sellers, so that they think that market has gone bearish. And there was some trend line and all that I've already talked about. Those were broken. And now people are expecting that gold should drop from here, things like that. Okay, so you can see the sentiment in gold and silver both are kind of bearish right now. Silver has given a much deeper correction, so that makes sense why people are bearish in silver. But gold has recovered actually pretty well. If we look at the structure, then this was a very sharp drop, but after that the recovery was actually, yes, it took some time, but comparing to silver, it was actually much quicker and faster. And also multiple POIs have been created, which is still being respected by gold. That's clearly indicating that the institutions are not letting gold fall. Those who have bought, the institutions, those who have bought, the smart money traders, those who have bought gold from this level or this level, they're still holding their positions, and they have not done 100% of their profit taking. That's why gold hasn't been able to drop all the way down and create a new breakdown in the daily time frame. So overall structure in the weekly and daily are still very much bullish, but over here, as you know, the fundamentals are kind of mixed up right now. That's why gold is unable to decide in which direction it should go. But overall, if we look at the structure in the daily, then it is very much bullish. And yes, as long as I've told you very clearly, as long as market does not close below 4,990 $495 in the daily time frame. We do not see a daily candle closing like this, a massive red candle. We cannot say that gold is bearish. But yes, if it does, then definitely we have to expect that, okay, we have got some sort of top over here, and now gold wants to give us a deeper pullback. Okay, but that is a secondary factor. Till market breaks below this low, we cannot say that we're looking at a bearish scenario in gold. So till then, gold is bullish. Even though it's kind of sideways in the shorter term, doesn't mean that it is bearish or it is unable to push higher. It's just a sideways move where the volume is down. And anyways, today is Monday, so you do not really expect much from gold in Monday, right? So today you do not really, you don't have any kind of trade in gold. It's just kind of sideways messing up, and market actually took out the previous candle's high, and then it dropped all the way to take out this low, and market is just playing within this range. So nothing nothing massive, just the previous candle's high and lows are taking out, and candle is playing within the previous candle's range. That's it. Apart from that, if we go to the lower time frame, such as the 4-hour, once again the 4-hour is just a sideways structure. Nothing much over here. It's clearly sideways. Yes, there was a fair value gap over here in the 4-hour, which gold tapped into, and after that gold dropped. Surely that was definitely bearish, you can say, correction. But once again, market recovered, and market is just sideways. If I look at the structure, it's just sideways. No clear trend in the market right now. Let's go to the 1-hour for more clarity. So in the 1-hour also, gold is just sideways. You can see market dropped from here. In the 1-hour, it became bearish over here. But after that, market also created some new POIs, and we actually look to enter last Friday after NFP, and I think you have got a good amount of move over here. And after that, the bias was still bullish, and we wanted gold to continue higher and take out this high, but it failed to do so. You can see the starting of this week, market started to drop once again, came all the way down. Now you have to understand the narrative. That's why I'm going through everything, right? I'm not just going to 15 minutes or 5 minutes like most of the like so-called YouTubers do, and they will just do some shorter term analysis that doesn't really help you to understand what's going on. So the narrative building is very important. Anyhow, so what market does is market drops from here all the way. Market takes out this last low in the 1-hour, and after that what happens is, if we go the 5 minutes, then 5 minutes actually breaks structure. You can see in the 5 minutes, market takes out this last low in the 1-hour, and then it gives a market structure shift, comes down, tests this order block candle, and then market pushes higher. So in the 5-minute, gold turns bullish once market takes out this last 1-hour low, and it turns bullish, and it keeps pushing higher. But once again, it's Monday, and you cannot really expect much from gold. So market goes up definitely, but it has created some POI over here. You can see 1-hour fair value gap while dropping to the downside and taking out this liquidity. And once market taps this, the 5-minute actually turns bearish once again. You can see that gold was pushing like this, created this high, then this low, and then this last high, tapped into this 1-hour fair value gap, and then it was kind of sideways, but finally it was able to break below this last low, making the 5 minutes bearish. Okay, so all the stories are important because it's a sideways market, so we have to look at the 5 minutes structure, the so-called structure. But I'm not a 5 minutes trader, but still, for those who look to scalp or something like that, definitely you have to look at this kind of structures in the 5 minutes as well. So the 5 minutes became bearish, and after that you can see that market went up, tapped into this 5-minute fair value gap, and then market dropped once again, took out this low, and then market became bullish once again in the 5 minutes. And why bullish? Because this is the 5 minutes low, the high, another low to sweep out this low, and then market breaks structure, breaking above this high, so it becomes bullish once again in the 5 minutes. So once market becomes bullish, market goes all the way up, and market takes out this last equal highs over here, and then market once again starts to drop to the downside. So it is all just a sideways play in the 5 minutes, nothing more. You cannot trade this kind of structures because it's a very difficult kind of structure to trade, specifically in the lower time frame. Surely if this was in the higher time frame, like in 1 hour or 4 hour, you could have definitely traded this, but since it's a very low time frame, you cannot get real confidence in trading this kind of structures. So once market took out this high, market starts to drop once again, and that's what we're looking at right now. The 1 minute created some POIs, tapped into this order block, and from here starts to drop once again. So basically in the lower time frame, this is just noise that you are looking at. The 5 minute turns bullish, and after taking out a liquidity, the 5 minute turns bearish once again, and this is what is playing out right now. But overall, in the higher time frame, the structure remains bullish. But if we talk about the 1 hour time frame, then the 1 hour has actually turned bearish because we had this market structure shift in the 1 hour. Then market went up, tapped into this extreme POI, which is the fair value gap, and from here market started to drop. And also, if you look carefully over here, then the 5 minutes has become bearish, like I said, and now 5 minutes went up, took out this last high in the 5 minutes, which was the liquidity, and then market has started to drop again. So this is what's happening today, the story of today's market, Monday market. This is what happens generally in Monday, as you already know. So there is nothing to think about, nothing to really look at. So what you can do is right now, you just have to wait for market to clear off the structure over here, which in the 1 hour is still bearish. And now it's possible that gold continues to drop. And if it drops, then as you know, we had a plan in the last week that gold can push upside in two ways because the higher time frame is still bullish. One was that market taps into this POI and market directly continues higher, which obviously played out, you can say, till it took out this liquidity. But after it did so, market dropped all the way down. So obviously it did not have much liquidity to continue higher directly and break above this high. So that means it's possible that gold is seeking liquidity, and that's why it's playing out the manner it does. I mean, it is doing right now. And it's possible that gold can actually continue this bearish structure that it has created and comes all the way down, take out this low which was created on last Tuesday at 4,996. You can say around $5,000, which is the main psychological level which everyone is looking at. And once market takes out this low, or you can say sweeps out this last low, it can turn bullish once again. And if that happens, we'll be looking for a buying opportunity because the higher time frame is still bullish. Okay, so the higher time frame is bullish, and as long as the higher time frame is indicating that the market wants to continue higher, the market is holding these higher lows that it is created, in that case we have to consider, okay, gold is still bullish. The institutions are still holding their buying positions. They're not doing 100% of their profit taking. In that case, we will be also looking for higher prices in gold, and we'll be also looking for buying opportunities. Okay, so right now, if you want to do some scalping or something like that, you can look for a 5-minute new breakdown below this low, below $5,060. If that happens, in that case, you can look for a POI which will be created somewhere. I don't know where the POI will be created. It depends upon the structure, upon how this low gets broken. So once that happens, you can look for an entry from the POI. Once again, this is a sideways market. So market is going to move like this. It's not going to move in a very single direction, single-handedly in one direction. It's not going to move like that. It is going to move in this kind of messy sideways structure, taking out liquidities on all this kind of dirty, you can say, market structure. So once market does that, then you can look for a sell entry, and you can target this Tuesday low at $4,996. And once that happens, once market takes out this low, then you'll be looking for buying opportunity. Like I said, once market takes out this low and you see 1 hour market structure shift or displacement in 1 hour, market creates fair value gaps. In that case, you'll be looking to buy from those 1 hour POIs, and you'll be targeting the 1 hour liquidity one by one. Okay, so let's say over here right now, I can say this is the nearest liquidity, so you can target this one. Then you can say we have got this as the very near points or near points of liquidity. So these are all very low resistance liquidity because market has already tapped this POI. So in that case, market can push higher, and if that happens, then next we'll be targeting this high as well. I mean, this is the order block, so market can push and tap this high, and then it can give a pullback, and then it can push further. So this is how you are going to trade gold from tomorrow, because today you can see this is the price action. It's not a tradable market. The 5 minutes is moving the market, and the 5 minutes is very messy right now. Market is getting bullish now and then. So it was bullish in the Asian session, it became bearish in the London session, and then right now the New York session it became bullish once again. So this is how market is playing out in the 5 minutes. So it's Monday, so you do not really expect much from gold, but this is the price action that we can see right now in gold. Yeah, so that's what we're looking for in gold. It's a messy structure. Do not really go and try to trade the 5-minute structure. This is not worth it. This is just noise. Do not get involved in this kind of messy lower time frames. So wait for market to either create, if you want to take a scalp entry, wait for a 5 minutes breakdown below this low. Then from a PO, I can look for an entry. If there is an order block here, we'll look at something like that. Use the confirmation to take an entry. And once again, do not expect a very single-handedly one-sided move in gold right now, because overall, this is just a range where market is just playing with liquidity, and those who are aggressive in this kind of market, they are going to hit their stop loss. They are going to become liquidity for the market. So in this kind of market, you do not really play aggressively. You do not actually trade at all. You just wait for market to give clean and clear price action, then take your entries after getting clean and clear confirmation. So this kind of market, avoid from tomorrow. Definitely once you see good volume coming in the market, because we have got very important news. We have got CPI, PCI, I think we have also GDP. So it's going to be very good week, very eventful week with a lot of volume. So when that happens, when you see clear price action, then definitely you can take those clean and clear setups. Okay, so that's what I had to tell you. The structure is definitely bullish in the high time frame, but the lower time frame is messy. It's sideways, and right now you just have to wait for market to give a clear breakout of this range. Either, like I said, the high time frame is bullish, so I'm only looking for buying opportunities. Either I'll be looking to buy once market takes out this low, which is highly probable, because the 1 hour is kind of bearish. We had this market structure shift, and market has reacted from this POI, and market has dropped from here, and also the 5 minutes is bearish. Okay, so it's definitely possible that gold can continue to drop and take out this twisted low, and from here, once we get a nice buying opportunity, we can take a buying trade from this area. Okay, apart from that, right now there is no selling opportunity. Yes, like I told you, if market breaks below this low, then definitely we can look for a sell trade, but till then I am going to be bullish in gold, because the high time frame, as I've shown you in the weekly daily, market is clearly bullish, and sooner or later it will be going for higher prices, and it is going to target this daily POIs that it has created. Initially, this will be our higher time frame target at $4,260. After that, this will be the next target at $5,420, and then the last all-time high at $5,600. So overall structure is bullish in gold. I'm still bullish in gold. There is no reason for you to sell gold in any way. Okay, there is no reason. Many people are expecting that because there is a bearish fair value gap, market will drop from here to 4,700 and so on. No, it's not like that. The higher time frame is bullish. As long as the institutions are not booking their profits, you can expect that the profit taking is going to happen at a higher level. Okay, so keep that in mind. You have to understand what market is doing, and not just look at the crowd, what the crowd is saying and all. If the crowd is saying let's buy, you buy. If the crowd is saying it's bearish, so you sell. No, you have to understand what market is doing and why market is doing what it is doing, and according to that, what should be your plan for gold or any other market that you trade. So anyhow, that's the plan in gold. High time frame is bullish, and we are only looking for buying opportunities. Okay, now in the 4 hour, we have got this trend line, obviously, and it's kind of messy right now, because still here there was a good reaction. We have got once, two, and three times nice reaction from here, but once market broke, this market is just sideways over here. So I don't think that's a very valid trend line right now. Those were trend line traders. They are looking at this trend line and expecting that gold should just drop all the way down to this low, but this is not exactly true, and trend line is something that is not very reliable. Okay, so trend lines are something that you can keep up to 3 touch points. Till 3 touch points it's valid. After that, as long as market just keeps hitting the trend line again and again and again, the trend line becomes weaker and weaker, so it becomes invalid after a certain point. So that's my view for trend line. Those are breakout traders. I think you can relate to what I'm saying because I was also a breakout trader previously, so I know how trend line actually works. And that's why now I follow the structures, because structure tells you a much cleaner picture, the cleaner story of what market is doing, where market is, and what market can do in the next couple of days or weeks or months, according to the structure, obviously. So according to the structure, like I said, daily bullish, weekly bullish, 4-hour sideways. I'm not going to say this is bearish or anything. Yes, if you want to say that the 4-hour candle closed below this last low, so this becomes a market structure shift, well, yeah, you can say so. But once again, I'm not looking at this as a 4-hour low. I'm looking at this as a daily inducement. Market comes down, taps into the next order block. So this becomes a very high confirmation entry model for buyers. My students knows this very well. So from here, gold should actually pump. Yes, initially it can be sideways, and I've given you multiple times this example where market came down, took out this low, an inducement, trapped sellers over here. Everybody became bearish. Everybody thought that we had got a major top in gold, and now gold is going to collapse from here. Everyone was saying that gold is now going to change its trend and all kinds of stuffs. But what market did was market came down, trapped sellers over here, induced sellers, tapped into the lower order block, and from here you can see initially market was actually sideways, just like gold is playing right now. Exact same price action. Initially gold was sideways, but once it got the momentum, you can see market displaced higher with the massive candles creating multiple POIs, and then market came down, tapped into this POI, and then market continued higher all the way to target the last high. And the exact kind of price action I have been showing you since the last couple of days, that's exactly the price action we see over here as well. Market comes down, taps into this daily order block, and from here market is sideways, but once market gains the momentum, market is going to displace from here very quickly. So that's why you have to be already ready that I do not want to miss this buying opportunity, right? And once market actually came down and tapped this zone, I told you that this can be the last time that you can actually get a buying opportunity for a swing entry in gold to hold the trade all the way to the last all-time high. So that's what I want to tell you, that do not miss this opportunity of this swing entry in gold. Gold is still very much bullish. Those who are saying it's bearish and all, they're looking at 1 hour and 4 hour stuff like that. But you have to understand that gold is something which loves to play with the daily and the weekly POIs, right? If you look at the previous price action, market came down, tapped on the daily POI after that displaced higher. Similarly here, gold dropped all the way down, took out this low, tapped into this daily order block, and market pushed higher to take out the liquidity. So this is what gold does. Gold loves to play the daily and the weekly POIs multiple times. Here also you can see we have got the weekly POI tapped into, which is also the daily order block that I just shown you, and market displaces higher. Here also market does the same. Market comes down, taps into the daily order block, weekly order block, and from here, even though initially sideways, but eventually gold goes higher and takes out the weekly liquidity. So this is the exact price action that we're seeing right now in gold, and that's why I've been telling you that if gold moves the exact same way that it has done in the recent couple of times, then we can catch a good amount of move over here. Even though we have already missed $1,000 of move, we can still catch this, you can say $400 to $500 of move over here. So do not miss this. If gold takes out this twisted low and then gold gives 1 hour displacement, make sure that you look for a buying opportunity and you hold the trade all the way up, at least to this high, because according to the structure, this will be the first target that market will take, and then market will give a pullback, and then market will displace higher to target the last all-time high. So there is a good amount of buying that you can do even with a smaller account size, even with 0.01 lot size. Very easily you can make $300 $400 worth of move over here, because I myself have caught this kind of massive swing moves with just 0.01 lot. I've got around 150, 170, 170, 180 kind of dollars of move. I'm not saying pips, 170, $180 of move. I think I've also sent some screenshot in my channel as well. So yeah, I've actually caught some moves from here, and there was some POI over here. So I actually caught some moves over here. And once again, I'll be looking for a nice entry and a hold the swing trade all to the upside, the last all-time high at $5,600. But before that, we'll be having at $5,400 as well. So overall structure is bullish, and we are still looking for higher prices. In the shorter time frame, yes, gold is sideways, just like I have told you. Previously also gold did the same thing just to confuse the buyers. Those who are looking to buy from the zone, they'll be confused. Why? Because market is creating 1 hour market structure shift. Obviously, this is going to be confusing for the buyers, those who are looking to buy gold, right? So that's the reason that gold is moving in such manner. Initially, it is going to induce the sellers, bring as much as liquidity of the sellers as possible, and then gold is going to move in the original direction that it wants to go to. Okay, so overall the story is gold is still bullish in the shorter time frame. Gold is sideways, but this is just a sideways movement, and that's why I do not recommend you to look at the lower time frame, to look at the lower structures, because this is just noise. So follow the weekly, the daily, the 4 hour, and yeah, if you want to do some scalping, you can follow 1 hour as well, but do not go below 1 hour time frame. That's also what I tell to my students as well, very clearly, because gold has a very good capability to confuse. If you look at it at the lower time frames a lot, then it is going to confuse your own analysis. So do not do that. Just follow the high time frames, follow the high time frame structure. That will help you to read the market quite accurately most of the time. Okay, so gold is definitely bullish in the high time frame. In the shorter time frame, whatever it doesn't really matter. Even if you want to take a shorter time frame trade, wait for market to break down below this low, then wait for a pullback to a POI, and then you can look for a sell entry. And this is the zone that I'm looking at, which is the twisted low. If market comes all the way down, takes out this low, gives some kind of displacement, then I'll be looking for buying opportunities. Okay, so yeah, right now I'm all bullish in gold. I do not have any kind of bearish theory. Only if market breaks below this low, we can become bearish and we can look for selling gold. But till that happens, till market just ranges over here, nothing to do, just wait and watch for market to come down, take out this low and give a displacement. Then you can look for a buying opportunity. Okay, so that's the rate in gold. Let's look at silver as well. So silver is also sideways, just like in gold, but in the higher time frame, silver is also very much bullish. This was the monthly POI that I have shared in my channel as well. You can go and find out the date when it was tapped, and you can see that this was the exact zone which was shared in silver. In gold, the weekly POI was shared, not the monthly POI, and market tapped in the weekly POI, and from here it displaced. Anyhow, so silver gave a much deeper pullback, so that's why we have considered the monthly POI, which is a higher POI than the weekly POI, which was shared in gold. So from here you can see there was a massive displacement. Now if we go to the weekly, market has given very strong displacement in the weekly time frame. Let's go to the daily. So in the daily, market has created this POI and this breakout structure. After that, market comes down, taps into this daily order block, and from here it shows displacement, right? Now let's go to the 1 hour. In the 1 hour, we can see that gold gave very nice push to the upside, and after that, gold actually was kind of sideways. Since last Wednesday, market was just sideways, just like in gold. Silver is sideways, just like in gold. And right now, actually, I'm looking at this high, which is at $84.5. So this is the level to watch. Why? Because once market closes a candle above this high in the 1 hour time frame, silver is going to become bullish in the 1 hour time frame. Why? Because market was dropping like this, created this low, then this high, and then market created this low. Until now, not a single candle has actually closed above this high, right? You can see today also market tried to close, but this was just a liquidity sweep. Market took out the high and then closed back down. So we want to see 1 hour candle closing above this high. Once that happens, the 1 hour will turn bullish. Why? Because the last low is taken, and after that market goes up, breaks above the last high, gives a candle closing above the last high. Once that happens, it will turn bullish, and then on pullback to a POI, to an order block, something like that, we'll be looking for an entry, and we can target this high, which will be at 86.8, around, you can say $87, just to round it up. Okay, and after that silver will push higher very quickly, because we do not have any high resistance liquidity over here. So we can expect once market breaks above $87, silver will go for $96, and once market breaks above this high, silver will continue to the upside and go for $106, because over here there is no other POI that can actually drop silver to the downside once again. Okay, so that's what we'll be looking for, and once market breaks above this as well, silver is going to go for the last all-time high, but I think that is going to take a lot of time, and once that happens, gold is definitely given us a new all-time high. So silver is kind of weaker right now compared to gold, but definitely silver is also gaining strength as gold also gains strength. But right now, both of them are just sideways. But in the 1 hour, this is the first zone to watch for, which is at $85. Once market breaks above this, then you can look for buying opportunity in silver. Okay, so that's the update in silver and gold, and I hope that it was clear. Apart from that, I don't think there is anything else to mention right now. And if you want to know about any other pairs, then you can ask me in the chat. I think the indices are actually kind of very bearish, and I think if you trade indices, specifically US 500, in that case, I think you can look for a sell opportunity because indices have dropped in a massive manner, and we can see that this was the weekly last break off structure, and after that market dropped all the way down, and I think now it is going for this last weekly liquidity because over in the daily market had this order block which was already tapped over here. Market gave a massive reaction, but after that market dropped once again. So it's very clear that it wants to drop to this low at $6,508. So for that, you can go to the lower time frame and you can look for a sell opportunity. The zone I can see over here is going to be this one, which is the mitigation block plus this fair value gap. So this zone has already been tapped. Now if you see 5-minute displacement from this zone, then definitely you can look for a sell opportunity from this zone, and you can target all the way down to this low, but make sure you book some partial over at this liquidities. So this will be your initial target, and after that this can be your partial target, and then you can hold the rest till this last low, or you can also look for a new opportunity to sell, and you can target this last low at $6,500. Okay, so indices are kind of bullish looking at the structure right now. Even Nasdaq, it is not bullish, sorry, it is bearish, and Nasdaq has taken out this low and is showing some good reaction. So let's see what Nasdaq does. But apart from that, SPX 500 is quite bearish, and I think if today candle closes below this low, then this is going to indicate that it is bearish, and tomorrow also we can expect a bearish movement in SPX 500. Okay, so this is for those who trade indices only. Okay, now let's talk about crypto a little bit. So crypto has actually given us a very good drop, and we can see that the monthly Bitcoin has dropped in a massive manner, taken out this last low, which is once again inducement. You should know that by now. And market has tapped into the monthly order block. And from here, the daily is actually sideways, which is a good sign that the bearish strength has now diminished, and the bulls are actually trying to hold the zone of $60,000. And here we can see that market has actually created some POIs that market is respecting. Market has created this 1 hour displacement to the upside, sorry, not 1 hour, the daily displacement to the upside, and market has tested, and also market has created a new break-off structure. So it's possible that Bitcoin can actually show some good bullish strength from this zone. Also, we have got a new POI over here which has been tapped, and from here also market is showing some good displacement to the upside, and as I can see, the 1 hour has actually turned bullish over here. So you can actually look for some buying opportunities in Bitcoin. I can see we have got this fair value gap, and below that, if market drops further, then we can see we have got this order block candle over here. So you can focus on these two zones. If market taps here and gives a reaction in the 5 minutes, then definitely you can look for an entry from these two zones. And once market continues higher, gives new break-off structure above the last high, you can also look for new buying opportunities, and then you can target the next potential liquidities like this high, and after that the next high, which will be at this one, and so on and so forth as market keeps pushing higher. Okay, but remember, the overall structure is still bearish, so it's possible that market can drop from here once again. But looking at the structure, market has created some kind of base over here, some kind of support at this zone, so it's possible that market can actually sustain at the zone around $60,000, and market can show some good momentum for buying over here. Okay, apart from that, if we talk about Ethereum, then just like in Bitcoin, Ethereum has also tapped a monthly order block. You can see market dropped all the way down after taking out the last all-time high. Market came down all the way down, and this is the last POI in the monthly time frame, and market has actually reacted from this zone quite well in the daily. Just like in Bitcoin, market has created this order block, this 1 hour displacement, and market tapped into it, and after that market has pushed higher, and once again market has tapped into this order block, and from here it is trying to push higher once again. So yes, just like in Bitcoin, Ethereum can also see some good upside momentum. If Bitcoin starts to gain some momentum, then Ethereum can also see that strength coming in, and Ethereum can also see some good displacement to the upside, and you can look for buying opportunities in Ethereum just like in Bitcoin. Okay. Apart from that, I'm not much interested in other cryptocurrencies like altcoins like XRP or Dogecoin. Yeah, they are, as you know, they have crashed in a massive manner. So maybe if you want to invest them, okay, but even for investment purpose, I don't think they're really, good right now. Because all of these moves, they came because of hype, and now that the hype is gone and the US economy itself is in a danger. So in this kind of market situation, people will go for gold rather than going for a meme coin or crypto just in general. So you have to understand why crypto moved the way previously it did, why it gave this kind of massive move, because people had money, people were buying hypes. But right now, as you know, the labor market conditions are very critical, so people don't have enough money to put in this kind of coins, and as such, we do not expect that we see a major move coming in this kind of altcoins. Okay, so that's the update in gold, silver specifically, and also the indices that I've given. And apart from that, more updates will be shared in my channel. Make sure to join this. You can find the link below in the description. And yeah, I'll see you with more updates as more price action takes place. And yeah, that will be it for today. I will see you tomorrow. Till then, take care and